Alright, what's up, y'all? ANTrades here. We're gonna make a quick video on liquidity. So I know if I keep looking over, by the way, it's because I have my notes written down for the video. But uh, we're gonna talk about what liquidity is, where can we spot it, things like that, right? I don't want to tell you what strategy we're using right now or anything like that, right? I just want to show you what liquidity is, help you understand what it is, kind of tell you the definition of liquidity, and then from there we're going to talk about more topics on the trades or the trading strategy I use, right? So what is liquidity? So liquidity is basically, I'm basically reading it down from my notes, by the way. But what is liquidity? It's basically a pool price. So essentially the banks will seek out where a lot of money is in the market so they can move it, right? So the banks, the people that are playing, with millions and billions of dollars, us, we're not moving it at all, right? We're moving where the bank wants to move it, right? So that's kind of where we have to spot it. And that's how we do it with liquidity. So we can spot where it's going if we can spot where the liquidity is to see where banks want to go so they can change the direction of the market. So essentially, liquidity is basically pools in price in the market, whatever market you're trading, and the banks want to seek out those prices so they can basically make the market move in the direction that they want it to move, right? And along with that, so to buy and sell a stock or a future or whatever, right? People need to be willing to sell their stocks, whatever you guys are trading, right? Stocks. So let's do NASDAQ, for example. NASDAQ E-mini futures. So if you want to if someone wants to buy the futures, somebody has to be able to sell it, right? So in those areas of price is where, you're seeing more levels of those areas. So basically, if you guys know what a stop limit is, right? Or a stop loss, people will put their stop loss at those price points, and you guys will see in a second where those price points are and why. But basically, banks will run to that pool of price. So that price, for example, right, let's just say 325, 330, right, is a pool of price of liquidity. Banks will run to 330 so people can get stopped out of their trade, so they can lose their trade, and that essentially means they are selling their contracts to the bank so the bank can then move it in the direction they want, and they can make their millions and billions and trillions of dollars, right? So that's essentially what liquidity is. So again, liquidity is a pool of price. Yeah, I'm reading my notes, but that's essentially what it is, right? The banks want to screw people over. They want them to lose money so they can make their money and they can enter their trades and blah, 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 and whatever, right? So that's really it pretty much on what liquidity is. So if you guys understand that, you're already, ahead of most people. So again, or not again, but what now is where can we see liquidity, right? So the easiest and most simplest way to kind of say how can we see liquidity or how can we see it without any, in-depth description is basically these highs, right? Or these swing highs. And what essentially a swing high is when we have this, right? We have this long wick here, and then we have a candle or a wick on both sides of it that is lower, right? So for example, here's one, right? So we have this wick and it's above the one on the left and above the one on the right. Here's another example here, right? We have this one here. This one's lower on the right as well as lower on the left. So that's a swing high. Then we have one here, right? So if you guys can see, I'm going to give you a couple seconds to kind of see some more, swing highs on the chart. And you can also do swing lows, by the way, right? We have this one here. This wick is lower. This is higher. Or this is higher. This is lower. This is higher, right? So I'm going to give you guys a couple seconds, see if you can, find some areas of, not areas of liquidity, but some swing highs and swing lows. Okay, so now that you guys have found the area of the swing highs and swing lows, essentially where liquidity is on the market, just a quick and easy kind of example, is at those swing highs and lows, right? So people will put, or sorry, not people, but banks, not even banks, liquidity, right, will be at these swing highs and swing lows. So there will be liquidity above this price right here at 360.25, right? It's at the high of the candle, or 360.5. You guys can see it right here in my chart, right? And then the swing low would be the spot of liquidity at 28281.75, right? Then we have more here at this low, 271.75. Then we have these highs, right? This high is at 321.5. Then we have this one, 321.5 as well. Right, we have another one here. This is going to be 255 on the dot, right? We have one more here, 200.75. So you guys get the point of it, right? And basically, when retail traders, right, people are trading, retail traders is just the average person, right? They are trading. They will put their stops just above or at this high, or for example, at this low, right? So let me give you a good example of where we have seen liquidity being taken. So here's an example here. So let's say someone wants to enter, they just enter short right here, right? So they sell, I can't even do it on here. Okay, well, we'll do this. We have this short position, right? So let's say someone sells here, right? Their entry is at 298.25, and then they want price to go to 202.25, right? And if it goes to 22.25, that hits their price, right? Or let's say they want it to go to lower, 142.5. Let's say someone predicts price to go to here, down here, 142.5 after entering here, right? So essentially what people will do is they will put their stop loss either right at the high, or they will put it right above the high, right? So let's say this person, for example, say I'm taking this trade and somebody wants to put it right above the high, right? What can you guys notice about price here, right? And remember, banks want to go to these spots of liquidity so they can essentially screw people over, so they can move the market in the way they want it to go, right? So what can you guys note here? So here, right, let's say this person entered their trade, right? Their trade's going down. They're like, okay, we're going to make so much money. Then what does market do? It goes up, it goes up, it goes up, it goes up. And then what do you guys see when it comes to here? It actually stops the person out, right? So it essentially makes the person lose their trade. They lose their money. So if you bet, if you're risking $200, you lose $200. You bought whatever 5 contracts. The bank is essentially buying those 5 contracts from you, right? So they can move the price of the market where they want it to go. So here's an example, right? They take out this high, right? It's always okay if you go a little above it, just like this example here. But what do you guys notice after we go above it? Yeah, we go down a little bit, we go up again, and then boom, big drop down, right? We have a huge candle down, and then market kind of goes down a little bit, and then what do you guys see here? It goes down even more, and then we kind of just stay at the same price, right? We're consolidating. That's what it's called. Consolidating is staying within a range, or it basically looks like it's not moving up or down. It's just kind of moving sideways, right? So there's one example of liquidity. Let me remove these drawings. Let me show you guys another example of liquidity. We had one today, actually, this morning. So let me show you guys this example. So just quickly here, let me zoom out. You don't even need to see the candlesticks, right? So based off this rough area here, can I draw here, brush? Let's see if this works. Yep. So this area here, where do you guys spot liquidity? Where can you see the liquidity? Okay, remember we're at swing highs and swing lows. So for this example, the spot of liquidity would be, can I replay? Yeah, I can. So I cannot replay. Okay, that's fine. So let's say you don't see this on your chart, right? So this is kind of what your chart looks like. So imagine that's not there. So what do you guys notice about this high here? So we have a high put in, right? So I'll draw this line. We'll just call it buy side liquidity. And buy side liquidity is liquidity up, right? So it's the swing highs. That's what buy side liquidity is. And sell side liquidity is the swing lows, right? So this is sell side right down here. And then buy side is these ones up here, right? And let me hide these indicators. Okay. Oh my God, my back hurts. Okay, so you see this high up here. What does this one do? What does price do here? So what are the banks doing essentially, right? They're going up. People have entered short here. So let's say they entered short here. They want price to go down here, for example, and they put their stops right at the high, right? So again, market's going down. People are like, okay, we're going to make so much money. And then what do you notice price does here? It goes right above that high where my stop would be. So it screws me over. And then what do we notice price does? It goes down, right? It goes up. And then it continues to go down, right? Down, down, down. Another area, little area of liquidity. Where do you notice? This high here, right? We delete this. We have this little swing high, right? Remember the two candles on both sides lower and the one in the middle higher. And the wicks and the bodies is okay too, right? But it's most of the time going to be wicks. And then we have this high that takes it, and then we dump down some more, right? And then what do you guys notice here? This is a little more, I guess, difficult to see, right? But let's say we see this one, right? And we always want to aim for the lower one, right? Or I take that back. Not always the lower one, right? You guys will understand when you kind of learn liquidity. That's kind of getting ahead of the game. So we have this area of liquidity, right? Sell side liquidity specifically because it's why it's lower. So we have this area where the banks want price to go so they can essentially screw us up, right? They can make us lose so they can win. So they will come down here. They will go below that price or just right below it, right? Or sometimes they will go down here like this. So price goes down here just below the low. And then what do you notice price does? It then goes up, 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 and then we kind of stay stuck for the day, right? So that's essentially what liquidity is, right? Remember, it's pools of price where a lot of price is at or a lot of orders are at. So for example, stop losses, right? So a lot of orders are, banks want to go there so they can screw us up so they can make their money, right? So that's essentially what liquidity is. And a big thing to remember is huge, is to remember why the markets move. And liquidity is one of the reasons why markets move, right? So again, banks want to make their money. They're greedy, right? They want to make their money. They're going to go screw us up so they can make their money. So again, markets move because of liquidity. So if you can understand liquidity, you're already 50% done of learning trading, right? So in a couple videos, we're going to go more advanced in liquidity. This is kind of like a basic run through of liquidity, just for people who still don't understand what liquidity is. And again, liquidity is a huge part of my trading. It's probably the biggest, most important thing of my trading. Identifying these spots of liquidity and seeing where, price wants to go because we have those areas of liquidity. So once you guys understand, or you can see the trade recaps that I've been posting on my YouTube, you can kind of piece together what liquidity is and you can see it. And then you guys can also go watch ICT. I know ICT does liquidity all the time. So, and that'll show you more examples of why liquidity is so important when we trade. So again, that's essentially what liquidity is. If you guys have any questions, comments, concerns, or whatever, right, just leave them in the comments. I also have a Discord here that you guys can join. And on the Discord, again, we post trade recaps and stuff, educational videos, books you guys can read and stuff. So again, any questions, comments, just like the video. Don't like the video, comment. And then if this video helped you guys out in any way, don't forget to like and subscribe. And that's it for today. And we'll go more in depth on a couple later videos. And I'll see you guys later. Peace.